Mike, let's start off by looking at exchange-traded funds and what they mean for the investor in South Africa, beginners as well. Is it a good way, a good entry point?
Well, I think so. No, exchange-traded fund is just a security. It's listed on the stock exchange like any other share. But instead of buying one company, you're buying a whole portfolio of shares. That's why they call it an exchange-traded fund. And that fund typically is an index. So you can buy an ETF which buys you the top 40 index or the financial index or the industrial index or resource index and so on. So it's a way of getting invested in the stock market, but with a diversified portfolio, and diversified portfolio of a series of companies reduces your risk and enhances your potential for performance. So ETFSA is a great way for investors to start in the market, but in fact a lot of sophisticated investors use them as well.
Okay, unit trusts, how do they differ to unit trusts, and are they better?
The same structure. A unit trust is the same collective investment scheme structure that regulates both ETFs and unit trusts. But a unit trust typically tries to outperform the market, whereas an ETF just gives you the performance of an index. And an index is the average return of the market because it measures the price of the major companies on the stock market. Now, a lot of people would argue that an index is very efficient because any information available in any company is already in the price of a share. So if you're buying an index, you're buying the collective wisdom of a market. And if markets are efficient, then it's, as Adrian said earlier, it's very difficult to outperform an index.
Lots of hypotheses there, so quite interesting. Adrian, your view on unit trust versus ETFs. Some say that exchange-traded funds are offering cheaper, better solutions for consumers out there, and therefore they don't go to fund managers anymore. Are you seeing that trend emerge in South Africa?
I'm not sure I'm in a position to talk about that trend. I just don't have that vantage point. I'd go back to Mark's observation, though, and that is about the efficiency of exchange-traded funds or indices. And I'm very sympathetic to this view. Most investors should be in an index or in an exchange-traded fund because of the mathematical impossibility of the average beating the market.
Noah, your view on ETFs and the traction that they've gained in South Africa, is it a great option right now for people sitting at home, never have invested in stock markets before? Is that
Eleni,
one way?
I think that's exactly it. I think for the person that has never invested before, I think it's the easiest way to be directly involved on the JSE. Again, I don't think it's my position to argue unit trust versus ETF. But certainly a security listed on the JSE that you have to go, or you don't have to, but one of the ways of getting involved in that security is via a stockbroker. The ETF is without doubt the easiest way to get exposure to the market.
Okay, Mike, how easy is it? What do we need to do?
Well, great, the two gentlemen agree with me. It's quite easy.
I was hoping for some fighting today, but unfortunately.
Yeah, you buy an ETF through a stockbroker, or you buy it through a platform which deals on your behalf. And ETFSA is a platform like that. So people can invest from small amounts, R1,000 lump sum, or if they want to do debit orders at the end of every month or every quarter, it can be from R300 per debit order. So small investors can invest. We'll do all the work. We'll go and buy the shares, we'll register them, we'll put them into custodianship, and we'll reinvest dividends and do all the rest and so on for you. So the investor actually has to do nothing except fill in the application
form. And how much
form.
do we pay ETF South Africa?
At the moment it's 1% per annum. It's going to drop to 0.8%. We've been going for 3 months and already we're bringing our fees down, so we're doing the opposite of most people. As we're getting bigger, we're bringing fees down. And that's quite cheap. Unit trusts can add value because a unit trust manager can outperform the market, but most of them don't. But they charge a lot more than that. So for indirect investment, an ETFSA is as cheap as you can get.
What ETFs are you finding attractive right now, Adrian?
The short answer to that is none. As an active manager, I wouldn't. My job is to do better than the market, which is represented by an exchange-traded fund. So I'm looking for companies that I believe offer far better reward, and that then takes me into shopping malls that Noah sets up.
So because you're from the JSE, Noah, I'm going to put you in the hot spot. What would you be doing right now? Would you have a mixture of ETFs, unit trusts, and various funds? What would you be doing?
Again, it depends. From the JSE, we win whether people invest in unit trusts, because if the 500 Rand that comes into the unit trust has to then be translated into a holding in the underlying company. The same with the ETF. has to translate into a holding into the company, plus the trade on the market, hopefully. We don't really mind. I think one of the challenges in South Africa is that in actual fact there are not enough people either in unit trusts or in ETFs. And that's a big challenge from a JSE perspective. If you look at Australia, over 50% of the income or income earning population are invested directly on the market. I think that number in South Africa is maybe 5 or 10% if we're lucky. And that's, you know, these are the guys that drive the economy. This is what grows savings. This is what grows spending. This is what grows everything else. And at the end of the day, we all win.
Mike, we've been talking about buying into the markets, but at some point you've also got to sell, surely. Your view on when there is, you know, a certain time for an exit point, when would you be exiting? I mean, you've also got to take the macro things into consideration. Is it about saying, okay, I've made 20% on this, or 70% or 80%, I'm now going to cut out and I'm going to sell at these levels? I know that greed overtakes a lot of people, and
that's,
you know,
a positive decision that many people have to make. And there's two ways to answer that. The one is, it's the best thing normally is not to sell, because there's never been a period of more than 5 years in South Africa where you haven't made money by just staying in the market. There'll be periods when the stock market goes down, but normally within 5 years it makes it up, and typically it makes it up within 3 years. So we had 2 bad years, 2007, 2008. The stock market's now getting, you know, fairly close to where it was at its peak, and if you'd bought it at the bottom of the market a year ago, in any ETF that generally tracks the market, you'd be 30% to, in fact, in some cases 40% up. So the right answer is stay invested for a long period and write out these cycles. But if you do want to get out the market, the big advantage of securities, and it's the same with unit trusts and ETFs, you can sell immediately. You know, you're not locked into a long-term policy with an insurance policy where you can't get out at a penalty. You're buying negotiable securities, and you can sell some of your shares, or you can sell all of your shares. Now, what we're doing in ETFs, we give a lot of choice. So people, if they don't want to be in the equity market, can go into an ETF that does the bond market, or they can buy new gold, which just gives them exposure to the gold price. And quite soon we'll have cash ETFs where you can just put your money into a cash deposit, as it were, but it's in the form of an ETF, which will offer you a better return than the banks. So you can stay invested in the market, but just move your risk profile around by buying different types of products. And ETFs are ideal for that, but you can do that through unit trusts, or you can do it through shares themselves. But don't be willing to always say that I have to make a decision, I've got to be in and out the market. Very often the best decision is to stay in the market until you get to my age.
And nobody ever got poor selling at a profit. You can't get poor selling at a profit.
Okay, there's also this perception that we could see a pullback in the markets, but does this not change the ball game? If you want to buy today, get into the markets now. Adrian?
Yeah, I'm with Mike on this, that investment decisions are about being in for the long haul. They're not about trying to time the market. Timing the market is theoretically very, very attractive. Everyone likes to believe that they can time the market very successfully. I think that it's fantastic on paper. It's extremely difficult in practice.
Gentlemen, thank you very much for your time today. That was Noah Greenhill from the JSE, Adrian Saville from Cannon Asset Managers, and Mike Brown from ETF South Africa. And I'll be